Hi, welcome to the African Topics. So key thing that happened last week was the Southern African markets. So we saw heavy losses, especially when it comes to Zimbabwe, South Africa and Namibia. Namibia lost 6.1%, while South Africa lost 4.8% and Zimbabwe lost 3.1%. And this is from a year-to-date perspective and looking at it from a dollar perspective. And the key reasons why we saw such heavy losses was particularly due to the depreciation of the currencies, especially when it comes to the Namibian dollar and the South African rand. And we saw depreciation by 5.3% on the Namibian dollar and 5.2% on the South African rand. However, on the flip side, we did see some gainers last week, and this was the BRVM market, which gained 0.5%, followed by Morocco, which gained 0.4%. And when we're looking at it from a year-to-date perspective, which are the markets that are actually doing quite well, and from a dollar perspective. So key thing that we're saying is Zimbabwe is the top best performing market this year, gaining by 26.5%, followed by Egypt, 12.1%, and South Africa 4.5%, and lastly Tunisia at 4%. However, the key losers, or the markets that have lost year to date from a dollar perspective, are Zambia, which has lost 19.6%. We have Ghana, which has lost 15.9%, and the BRVM market, which has lost 11.9%, and followed just closely by Nigeria, which is also losing currently at 11.8%. And something to note is, again, the equities markets, we have seen them since the first quarter of 2019 sort of have pressure, especially when it comes to selling pressure, and we've seen the decline in the stock market. But again, some other markets are picking up, but largely we've seen pick up, especially when you look at the Eurobond market, which has done quite well for some of these countries. And key news for last week particularly was one, the US Fed cut their rates for the first time since 2008. They cut it by a quarter basis points, which is about 0.25%. And what the implication of that was, it was a factor of growth, especially when it comes to global growth and the outlook on that. We've seen that global growth, according to the IMF, is expected to grow this year by 3.2%. And this was a revision from April, where they expected the economy, or the world economy, to grow by about 3.3%. And largely, if you narrow it down to which economies are actually doing well versus which ones are not doing so well, we see that the advanced economies are actually declining. So advanced economies last year grew by 2.2%, expected to grow this year by 1.9%. However, when it comes to emerging market and developing economies, we're seeing at least some robust growth. However, still sliding, but still as well higher growth. So last year we saw 4.5% in growth, and this year expectation is about 4.1%. So consensus was the fact that the Fed will cut their rates. However, in the next meeting, whether or not they will cut their rates remains to be seen, because what was stated was the fact that they're not pursuing a dovish policy, but it was more or less a correction to react to what was happening, especially when it comes to the global growth, as mentioned earlier, as well as the trade tensions between US and China. And lastly, it's in regard to Zimbabwe. We've seen Zimbabwe adopted they adopted the Zimbabwean dollar as the official tender currency in February this year. And they scrapped off the use of your US dollar, which had been used since 2009 as the official currency. They even scrapped the South African rand and other currencies. And what the implication of what we've seen that is, there has been a severe shortage of foreign currency in the market, which has affected significant when it comes to the different companies as well as the individuals throughout the country. And what's key thing is the inflation rate. And estimated inflation for the country is about 558%. And it's only second to the highest inflation in the world for Venezuela, which is estimated about 35,000. And what Zimbabwe have decided to do, or the government, is they've decided to, at least for the next 6 months, scrap off the inflation or announcing the inflation data. And the impact of this largely is, we see this as maybe moderating some sort of moderating panic, because every time they were announcing the inflation data, again, it creates some level of panic to the public and reminds them of where they were, especially back in 2009 when they had adopted the Zimbabwean dollar. So Zimbabwe remains an interesting country to see, especially since the stock market has picked up significantly over the last 3 years. But however, there are concerns whether they'll be able to sort of turn around, especially after with the new presidency, with Emmerson Mnangagwa taking reign from Robert Mugabe. So Zimbabwe remains interesting. And looking at our African topics in particular and what that has done, so year to date we are up 4%, and since our inception, which was the beginning of 2017, our peaks are up 58.5%. And if you compare this with the index is up 13.2%. So we at least see that our peaks have performed quite well, and it's an encouragement to potential investors that with NABO, at least we're able to generate some return above market, and we continue to pursue the same going forward. I think with this, I'd like to thank you very much. If you have comments or any additional information you'd like to share with us, kindly email us, and we look forward to interacting with you. Thank you very much for watching African Topics.